You've warned that Chinese companies entering the U.S. market will encounter significant legal problems. What types of problems will they face?
There are a couple that are important. One is to recognize that there's going to be regulatory scrutiny. Second, they're going to have to look at the risk of lawsuits. And I think the third issue that they're going to have to come to grips with is their accounting team, given the increased oversight.
Why should a company that doesn't have a fraud problem expect to encounter legal trouble?
Well, they shouldn't really, but what they have to understand is right now the playing field is such that there's going to be scrutiny. But if they're not committing any fraud and their stock price is good and they're meeting all their reporting requirements, they should be in pretty good shape in the long haul.
In this current climate, do you recommend that Chinese companies continue to enter the U.S. market?
Oh, absolutely. The U.S. capital markets are very strong, and I think worldwide there's an interest in having access to them. IPOs and reverse mergers are ways to do that. We just think that the IPO is a better way to do that.
Why is the IPO a better way to do that?
From the shareholder standpoint, the IPO has more scrutiny on the front end. Usually there's more participants involved. There's a deeper vetting of the company and its accounting. There are more investment banks involved in that process, and I think it leads to a better result. It's a process that the regulators are more comfortable with.